I'm Jen Vale. I am the Director of Professional Learning and Standards at Civitas, and I am joined by Emily Getchell, who's our interpreter. So we love having Emily here. You happen to be joining the last decal webinar of this contract year. So we basically will be pausing and I believe picking up. We are going to be working with decal for a fourth year, and we will be picking up then in November. So this is the last webinar of the year, and we're going to talk about a little bit of a misnomer. So we're talking about proactive planning for year end, but it's actually something that we do at the end of third quarter, beginning of fourth quarter. So you're here right at the perfect time to think about what you could do at the end of September or the beginning of October. So we're just going to kind of jump on in, but again, small group tonight. So if anybody wants to come off, if you have any questions, do have to do the disclaimer that the information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information and recording of the content, including the use of AI, are expressly prohibited. Only non-commercial uses of the work are permitted. If I do happen to see anybody turn on the AI note taker, I have to turn it off, or I don't like to kick anybody out, but we'll have to make sure that stops there. So well, let's get moving here. So all right, well, there is a practice that we recommend all providers implement either at the end of Q4, as I mentioned, end of Q3, or the beginning of Q4. And why do we do it at that time? We're going to talk about where we start. I refer to it as the mid-year. The title said year end, right? But I'll basically refer to it as the mid-year planning, which mid-year, we're not doing it in June, but that's okay. I'll explain in a moment there. A lot of what we'll talk about today involves estimated taxes. And the reason, how you can go about at this end of September, beginning of October, checking and seeing where you are in terms of the amount of estimated taxes that you've paid. So we're going to look at two different methods that you can use to determine where you are in terms of your, are you behind or ahead in paying your estimated taxes. So we're going to talk about that because we want to make sure by the end of the year, we don't want you to overpay because I want you to be able to use your money, but we also don't want to underpay because there are penalties, and we don't want to be hit with a huge tax bill, right? It could become tax season. So we definitely do not want to do that. So that's one of the reasons why we really do this review of estimated taxes. So we're going to take a look at that, see what you need to do there. And then once we've determined, we've looked at the two different methods, let's talk about some ways that you can mitigate taxes now that we'll have a couple months to take control and maybe make some changes and adjust accordingly. So, all right. So this is very much a recommended practice for all business owners. And of course, childcare centers and family childcare highly recommend this, really taking that time at the end of Q3 and the beginning of Q4 to really see where you are in terms, especially of at where you are with your estimated taxes. There are lots of things that you can do at that time of the year. I love it because it gives us the opportunity for a few more months before December 31st, right? To take a look at, do we want to make some, maybe we want to make some larger purchases, or maybe we have to do some adjusting. So this is a great time for you to be joining, as I mentioned earlier, because September, October is when we really want to do this on an annual basis. You want to really, really be aware. We want to know where your tax liability is before the close of the year, while we can still do something. And that something may be perhaps changing our estimated tax payment for that Q4. With estimated taxes, just if you're not familiar, Q4 is actually September through December. So it's not just October through December. And a lot of individuals, just so that you know, if you're here and you're listening in and you're like, hey, estimated taxes, it is something that a lot of business owners in every type of business in the United States don't realize when they have to pay estimated taxes in terms of the amount of taxes that they, oh, no slides. Hold on just a second, everybody. I apologize. I can see that it was shared. Could I get a thumbs up? Can anybody see my screen now? We're good? Okay, I apologize. Hey, you know what? Let's just go back and look at that last slide. I only missed one. I apologize. I can see. So I'm so sorry about that. Makes no sense. So we're going to talk about where you're going to start, and we're going to talk about the information that you're going to review, and then how you can mitigate your taxes. I didn't want anybody to miss out on that slide there. So the law is, the IRS rule is that any business that is going to have a tax liability of more than $1,000 this tax year, that would be due in Aprilish, right, of 2027. If you estimate that you're going to have a tax bill of $1,000 or more, you actually have to pay at least 90% of the taxes for this year in quarterly estimated payments, or 100% of last year's taxes. And so many businesses are not aware of this. So many different businesses. This is not a problem in childcare. This is just small business owners don't realize that this is the rule. And what happens then is that the IRS does penalize. They do charge penalties if you are not making the estimated tax payments on schedule. And if you're underpaying, they can charge you penalties. And those penalties sometimes just skirt by and you don't even realize that you're being charged. So there are many reasons, one of which is to avoid penalties, that we want to make sure that we're paying our estimated taxes. But the beautiful thing about estimated taxes is that once you are on track, it means that tax season next year is not going to be as stressful because you've prepaid. And if you've overpaid, you will get that money back, right? So if you've paid too much in estimated taxes, you'll get it back. But my goal is to see if you could adjust some things in this September through December period so that maybe you've been paying a certain amount every quarter, every estimated tax quarter. You've been making those payments, and then it turns out that perhaps you don't have to make as large of a payment at the end of the year. And the word estimated really does apply here, because we are just basically doing our darndest to make sure that we are meeting at least 90% of what our tax liability is going to be this year. We can't know dollar for dollar, right? Right now, we have a very nice history of the year behind us, as fast as it went. So we do know our expenses and our revenue year to date, but anything could happen, right, in the next few months. But the idea being is to be really aware. You're seasoned business people, you have a pretty good idea what happens in childcare businesses between the end of August and December 31st. So when it comes down to it is you do some research, and we're going to look at two different methods that I would recommend that you do now so that you can get an idea. Are you on the right track with your estimated taxes? And if not, what can you do then in this last quarter? What changes can be made there? So just reminding everybody, please put your PDS number and your name in the chat for us so that we can make sure that you do get credit tonight there. So, okay. And estimated taxes are your responsibility throughout the year. If you have a tax preparer, they may be tagging you, or they may be sending you quarterly reminders. They may be reaching out and saying, oh, hey, remember. They may have helped you set up your IRS portal to pay your estimated taxes, or maybe they didn't. Sometimes there's a struggle to find great child care tax preparers, so we have to take things into control and take care of them ourselves. And that is why being very, very aware of this so crucial. And it's every business structure, right? So it's not just those big guys. It's not just S corps or C corps or LLCs electing to file as S corps. It's sole proprietors and single member LLCs and individuals. So if you've ever been in a circumstance and you're going to have a tax liability of more than $1,000 personally, the IRS wants you to pay estimated taxes. A lot of people don't know that. They think it's just for business, and it isn't. This is an IRS law that basically goes across everything. Thank you for the PDS. I appreciate that on there. What's going to happen is, towards the end of the presentation, I'm going to throw a bunch of links in the chat. I can't do it right now, only in that if anybody logs off and then jumps back on, they won't be able to see the link. So towards the end, I'm going to put links in there. We do have an app. It's called the Tax Rubric. So you'll see the link in the chat when I take a moment to put everything in after we've been here for a while. And that actually, what does that app do? Well, it lets you gather all the revenue year to date, gather all the expenses, and get a really good picture of where you are now. Because that's what we need to do to determine, are we on track with our estimated taxes there. So you'll end up seeing that's called the rubric. So, well, when it comes to estimated taxes, two different ways that we recommend that you figure out where you're at, right? That we get a good picture. And one is called profit driven. And just like it sounds, it's based on your revenue minus your expenses, what your profit is on an ongoing basis and where we are year to date. And then the other is called family income driven. And what that is very helpful for is if you also have either, you probably, if you're an S Corp, you're paying yourself via W-2 wages. But if you have a spouse, if you have someone else in the household who you are counting their income, or you have additional income, what you want to be able to do is look at everything as a whole, because maybe someone's W-2 withholding needs to be adjusted and not just the amount of taxes that the business is paying. So we have those two methods. So just keeping that in mind, let's look at profit driven. I know there's a lot of numbers on the screen. You're going to see in just a moment how truly simple this is. So what we want to do when we're talking about profit driven is exactly that, in that let's gather every single bit of revenue that we've had year to date. And I want you to think about not just your tuition, but your subsidies, if you did have any grants, if you received money for the CACFP, if parents paid you in cash, if parents paid your families, I should say, excuse me, if families paid you via payment apps like Venmo or Cash App. Let's get it all together so that we have a very, very accurate picture of what our revenue is. And then we start to look at our expenses. And as you all know, right, when it comes to tax time, record keeping is key. So sometimes we have to take a breath to look at, figure out exactly what our expenses are, if perhaps we've either fallen a little bit behind on record keeping or anything has shifted throughout the year. Because again, we want to get as accurate of a picture as possible. So I ask everybody to stop and think about what your major expenses, ongoing expenses are, and we're going to put those all together. And that includes, if you are a sole proprietor, single member LLC, family childcare, that does include business use of home. So it does include gathering all of those expenses that are shared between you personally and the business, and using your time space calculation to determine what percentage of each of those expenses you'll be able to take on your taxes, because we want to figure out, hey, year to date, what do those expenses look like? And we do need to use time space if we're talking about shared expenses. And I will be putting a link in the chat to a very, very easy to use time space calculator that you can just plug numbers in if you want. I also, you'll hear me say this more than once, we are at the end of the year for Georgia, but and if you wanted to take any group coaching, we have to have you register by this Friday. But I still have a couple months if you would like to do one-on-one coaching. So by the end of today, I'm also going to talk to you about one-on-one tax coaching that's available if you would like to take advantage of that. So just so you know, not a commercial. It's a very, very, very great value, and Decal makes it possible for free. So basically, now we've looked at all of our income, we've looked at all of our expenses, and there's our profit, right? At the end of the day, profit is what we're taxed on. Income minus expenses, profit. If you are a sole proprietor or single member LLC, that's the number that ends up on line 31 of your Schedule C, and you pay 15.3% self-employment tax on that number. If you are an S Corp or an LLC electing to file as an S Corporation, keep in mind that the profit, you do not pay self-employment taxes on that. It instead transfers over to your 1040. If you are a sole proprietor or a single member LLC, yes, you pay that 15.3% of the profit that's on line 31, but then you also pay your personal income taxes on it, on your 1040. where an S Corp or a business electing to file as an S Corporation doesn't pay the 15.3% there. The business is paying payroll taxes, and as W-2 employees, if you are an S Corp or electing to file, you are paying yourself via W-2 wages, and you are paying an employee's share of payroll taxes. The business is paying that. At the end of the day, that math is 15.3%, but what transfers over that bottom line, you're not paying the 15.3% on the whole thing, right? The business is paying some of it, and that number is not just transferring over to your 1040. So we've got that number of profit, okay? In our particular example, $38,000 in profit. This is Tanya. So Tanya had a good year, right? So $105,000 in revenue as of, let's say, today, right? Could be July 1st if it's easier for her record keeping, whatever the circumstances are. And she added up all of those expenses, and there's $67,000, so $38,000 in profit. The 20% that you're going to see here is just an estimate. On average, many smaller childcare businesses, family childcare centers, individuals would have a 20% tax rate themselves on average. So that is not necessarily your tax rate, but we have to have something for math. We have to have something there. So in this particular instance, we are looking at her being in a 20% tax bracket. So we took that profit of $38,000 and we multiplied it by 20%, 0.220, right? That amounts to $7,600. That basically is the estimated tax that would have been due by this point of the year, which would be, we pay Q3 in September. Again, quarters are a little different when it comes to estimated taxes those last few months of the year. So we would, based on what we've calculated for Tanya, and we know that her profit was 38,000. We know that 20% of that is $7,600. That's what, as of the end of August, she should have been paying in estimated taxes. That is approximately what she would be what her taxes would be next year. So fantastic. We take a look at that, and then this is where it's estimated. Remember, everybody, it is estimated. But what you want to do is you want to stop and think about, what does the rest of the year hold? Well, are we expecting increased enrollment? Are we expecting decreased enrollment? Maybe we're offering a new service. Maybe we're doing non-traditional hours, or we're holding all sorts of different types of activities that could be extra streams of revenue, right? So maybe the revenue is going to be increased. Or maybe we're having a good year and we've decided to make perhaps some improvements in the business. Maybe we're making some large purchases. Maybe we're doing something that's going to drive the number of expenses up, right? So either we could have a lot more profit by the end of the year if we expect more revenue, or we could actually have less estimated. Again, remember, this is just through August, we're assuming. Or we could have higher expenses, so less profit. We just stop to think about historically, what does those last few months of the year, what does it look like? And what is your plan? Because at the end of the day, when we look at the $7,600, that's what she actually paid. She paid that to date there. And excuse me, those are her total, I apologize. Those are her estimated taxes for the entire year. I apologize. I just messed that up there. And what we know that she's paid so far, I'm going to back up, guys. I am so sorry. She is including her extra revenue for the fourth quarter in that $105,000 number. I apologize. It's been a little while since I've done this. These are my notes are a little different than that. Often we look at it first as where you are, and then we make the estimate. They've already made the estimate in this example. So I usually look at it in two steps. They've done that for us. So that $105,000 is actually what they have thought about. All those things we just talked about, increased revenue, maybe we have more expenses. That $38,000 in profit includes my second step. So that's two steps altogether, because I was going to say, let's determine exactly where we are now, and then let's think about the variances that could happen. Step one, they've done that. They've done that for us. So we know if this were to hold true, again, it's an estimate, at the end of the year, $38,000 in profit multiplied by 20%, $7,600 would be the overall tax liability for this year. Now, that's the total estimated. And if we looked at, let's say Tanya, she goes into her portal. So every business owner and anyone paying estimated taxes has an IRS portal. And I actually have a link for you that will take you to the area in the IRS site where you can click on the links for the portal and how you set up your automatic, how you can pay your estimated taxes. Very, very easy to do. They make it simple for you. So in this instance, she went to her portal and said, oh, I paid $6,000 in estimated taxes this year. Okay, $7,600 is what I expect my taxes to be by the end of the year. Therefore, the difference is $1,600. Well, if we look at the math there, she's been paying more than $1,600 a quarter. She's been, if we take 6,000 and we divide it by 3, because she's been paying 2,000. But based on now her estimate, and she made this as an educated decision. She had a good idea, perhaps what's going on with revenue, with her enrollment, and as well as being able to estimate some expenses. So she knows, hey, wait a second, I've been paying $2,000 a quarter. Pretty sure that $7,600 is going to be on the money. So she has two options, right? She could just continue with the $2,000 payment for quarter 4, as she has been, those other 3 payments. She could do that. And then, of course, if she overpays, she'll get a refund, right? Fantastic. Or she could say, you know what? I could do something with that. Instead of $2,000 for quarter 4, I could do something with that extra $400. I could be actually, maybe there's something else I want to invest in. Maybe high yield savings account. Maybe we're going to put it towards our reserve fund. Maybe there were things, whatever it is, that helps the cash flow, right? We're not paying out. So if she feels really comfortable with that number, she could make just a final estimated tax payment of $1,600, not the $2,000 that she had been making, because she has overpaid her estimated taxes as far as she can tell. I understand 2 different sides of that coin, right? We've been paying $2,000. We don't know for a fact that $7,600 is going to be our overall tax liability for the year. Jen, you know what? I'm going to stick with the 2,000 and I'm going to get a refund, and maybe even more, right? Because maybe we're going to have higher expenses and less tax to be paid on profit. But the option is there. And what we love to do is, this is a great scenario, right? But what if we did this and we haven't paid nearly as much in estimated taxes as we needed to? We came together, we looked at everything we had to date, we thought about Q4, put it together and said, oh boy, I am not on track for the right amount of estimated tax payments. So 2 things happen then. One, the IRS looks, and if by the end of the year you haven't paid approximately 90% of what your overall tax liability is expected to be, you're going to have penalties. And then what also happens come next tax season, right? January through April. If you're a S Corp, March, you have to pay your taxes by March. What's going to happen then? Wow, we're going to have a much higher tax liability. We are going to pay more in taxes than we wanted to. And the whole beauty of estimated taxes is spreading out that tax obligation throughout the year, right? So what does this do? It puts us in the driver's seat if we want to adjust because we've been overpaying. Lets us make a decision if we just want to continue paying what we have been and maybe get a little bit of a refund, or it lets us correct course. Lets us stop and say, hang on a second, looks like I haven't paid nearly as much in estimated taxes as I should. Let's make some changes in quarter 4, right? A couple things we could do. We could be making a much larger estimated tax payment in or a larger estimated tax payment in quarter 4. Or we could, perhaps we do need to make some purchases that we were going to make in 2027. But maybe, you know what? Maybe we make them in 2026 and we lower our profit, meaning we lower our tax liability. So when we come up here at this mid-year, it is a fantastic picture of exactly where we're at. And you are in the driver's seat. You make the decision what it is that you want to do. I love nothing more than when tax season comes and the child care providers that I work with, both family child care and centers, say, you know what, Jen, I'm aligned. And sometimes they're very eager. We have the app. I'm going to put the link in there. They're eager at the end of the year to see how close they were with their estimated taxes. What is it going to look like come, you know, let's say February, March, April, right? Um, that's empowerment. And I want childcare providers throughout the country, but certainly our providers that are supported by Decal to take control of your taxes because it is difficult to find someone who uh, sometimes there are qualified tax professionals. Not going to say there aren't. However, it is a challenge that I see across the country, especially family childcare, lack of qualified tax preparers. And I will also throw out there that I think certainly all family childcare and probably a lot of centers, you can do your own taxes. You can learn to do that. It's not that difficult. So here's the Jen commercial. So Decal, until the end of October, we are still able to do one-on-one tax coaching. Tax coaching can be, again, I'm deviating, right? But I just want to plant the seed so everybody thinks about it. Tax coaching can be 30-minute phone call where you have questions for me or for Carlos. We're the two of the tax coaches. Jen, I've got questions here, I've got questions there. Or if we move and we get going, we actually can do what for this contract year, we can do what's called a tax assessment. And what that means is that you share with me last year's taxes, 2025 taxes. If you've already filed them, maybe October is the extension deadline. So perhaps you're in a situation where you haven't filed those taxes yet. If you'd like Carlos or I to take a look at those taxes, either the previous year or as you're getting ready to file with that extension looming, we're more than happy to take a look and see, are there any areas of opportunity? We have a pretty good idea of what your expenses, we know what you're entitled to in terms of the type of expense. We take a look at last year's taxes. Did that tax preparer help you gain every single expense you were allowed? Is everything calculated properly? Is everything where it should be? The whole idea being is that by doing an assessment, we are trying to help you mitigate risk. So at Civitas, and this is Decal, we walk hand in hand that the goal is to coach to help you make more money, save more money, and mitigate risk. And that's what we look at when we look at tax assessment. I will say, I love nothing more than to see a perfect tax return. You're in good hands. Yay. A lot of times people say to me, I can't believe you didn't find me more deductions. I say, I want to high five you. Your taxes are right. But there are a lot of times where we find errors, maybe minor, maybe glaring. So if you have any interest, you certainly can go to the Decal, and again, I'll put the link in there. You can go to the website, right, to the Thriving Childcare Business Academy. Or if you want to put your name and email in the chat and just let me know that you would like one-on-one tax coaching education or assessment, more than happy to schedule you. We have more than a month to go until the end of this contract. And we do a lot of tax coaching with Decal providers because Georgia and Decal, unlike other states, lets us actually see your tax return. Many other states, as coaches, all we can do is tax education. We can't look at your tax returns, except Georgia is one of the states that lets us do it. So if you'd like, there's my commercial, right? If you'd like one-on-one tax coaching, please feel free to put your name and your email address in there. And at the end of this, we're going to see a whole list of things that you can still do one-on-one coaching. So, all right, I'll back out of that. But I hope that you realize that part of my bringing this up is I want everybody, I truly am passionate about all of you being so empowered with your taxes. You do not need other people in many circumstances to do your taxes. One-on-one tax coaching, we can show you how time space is not difficult. And I'm going to give you a link with a calculator. Understanding business use of home, not difficult. I'm going to give you guys a link to a guide that we have. Mainly applies to family childcare, but there are some things. It lists all the different types of expenses. I don't want people to be overwhelmed and feel that you can't take control of that because you can't. I'll tell you right now, see it nationwide, work with thousands of childcare providers every year. So in this particular instance, if any of you have ever coached with me, you know that sometimes I'm all over. So in this particular instance, okay, what could we do? Let's say she's more than online, right? I should say inline with her estimated tax payments. Great. But boy, you know what? She didn't realize she's got $38,000 in profit. That's a lot of profit to be taxed on. What can I do? We want to think in that last quarter about the mitigation, the things that we can do, right? What can happen? And we're going to look at a list of things that you can do, but I will plant the seed right now for one thing. So I'll repeat myself, all right? But for one thing that you can do after December 31st to lower your taxes for 2026. What the heck? What, Jen, you can never, whatever it is, December 31st, boom, that's what my profit is. That's what I'm paying my taxes on. You have until April 15th of the following year to either open a retirement account through your business or make contributions to the retirement account you open through your business, not your personal, not your Roth. Your Roth is an entirely different thing. I'm talking about businesses and taxes. So at the end of December, we take a look and we say, or January 1st, it's a lot more profit than I thought. If you have a retirement plan, make a contribution from last year's profits if you want. It goes to your future. That contribution is an allowable business expense, and that's what's lowering your profit. Taking care of ourselves in the future. If you have one, if you don't have it, they're easy to set up. What's called a SEP IRA, SEP IRA, is a very inexpensive way of going about setting up a retirement plan through the business. You may already have retirement plans through your business. Hey, there's a little more profit than you expected. It might be a good idea to take a look and see if you'd like to move some of that over to retirement. Because one of the other things that we're very passionate about at Civitas is retirement planning. I just happen to be one of the retirement planning coaches. So if you are interested in one-on-one retirement, throw it in the chat, okay? Because we've got in this contract, have until the end of October. Would love to talk to you, love to take a look. And if anyone on this call feels any type, God forbid, if you feel embarrassment or shame that you maybe don't have the retirement savings that you think everybody else does. No, they don't. Are there people that are on track for retirement? Of course there are. Majority of the country? Nope. Not just childcare, the country. So nobody should ever feel that it's too late to talk about retirement, and no one should ever feel that you don't have to tell me anything that you have saved. You don't have to give me a number. But if somebody wanted to, they shouldn't be embarrassed by it. This is a nationwide problem. We do not teach people in the United States about the right ways to save for retirement. If you are doing it, please share it with others. Pay it forward. Just like if you've got a great tax preparer, pay it forward. If you have retirement and where you want to be, share it. Please share it with your fellow childcare providers, the people in your family. For the love of God, the young people that we know that at 22, 25, 30 could change their entire future. There you go. Just, you didn't expect to talk about retirement. Maybe you didn't want to. Just filling everybody in there. So, so there are things, and we'll look at a big list that Tanya could do to mitigate her taxes, to lower her taxes. This is the version of figuring out estimated taxes. If this is more accurate because it takes family data into consideration, meaning the other person or people in our household whose income is going to be included with ours, right? So we've got everything from the business, and that's going on our 1040. And then do we have a spouse who's being paid via W-2 wages or via 1099 that need to be combined and put on our tax return, or if we're filing jointly, right? So this is the method that basically we take a look and we say, okay, we know what we as a business have paid in estimated taxes so far. I want you to go back to that step one. Think about what you're going to be doing in quarter four and add it all together for us, right? So step one, and on that other slide, one big step. Get it together so that we have a good idea, just as we did with Tanya, with the estimated taxes for the business. But then let's take a look at where we are pay stub wise on anyone in our lives who has a W-4, right? Where the W-2, excuse me, W-2 wages, where are they year to date? Where's their income? How much have they paid in taxes? You have a pretty good idea of what your tax bracket is from previous years, but you also can find it very easily through online through the IRS, exactly where, if you knew my business profit plus my spouse's income, oh, our tax liability is this. How much have they paid out of their account? You know, What does this look like? What is their withholding year to date? And let's pull that all together and take a look. And the way that they have this worked out here is this individual, $54,000 in wages through June, right? So the first 6 months of the year. Let's hope I get this example right. I think that this is the one that's the way I always do it. Six months through the year. What does that mean? Well, if we divided it, it's $9,000 in wages throughout the month. We divided that. So we're going to take that $9,000 and assume that it's going to continue to be $9,000 a month for the next 6 months. Then we're going to look at how much in withholding taxes has our spouse paid, or maybe we're added in there. How much in W-2 withholding has the family paid so far? In this particular instance, through June, $12,000. All right, that's $2,000 a month. So we're making $9,000, our spouse, $2,000 of that is coming out of withholding taxes. We know we've done our math on the estimated tax side. I have a very good understanding based on previous years and a little bit of research. Google, even AI. I'm not a huge fan of AI with taxes, I'll tell you, but you certainly can determine what your tax bracket would be based on the information that you have here. Good idea, a good idea, estimation. And so basically, if we took a look at this, we know by the end of the 12 months that our spouse's wages, $108,000, and the taxes, $24,000. Well, we know that that's based on the 2000, right? So when we take a look at that, we are really taking a look and saying, hold on a second, we do that little bit of a calculation, and are we in line? Is enough being withheld from the W-2 wages? We've already thought about what we're doing on our side and with the business with estimated taxes, because perhaps there's a situation here where our spouse doesn't have to pay. Fingers crossed, right? Maybe they're withholding too much. Refunds are great, guys, but refunds are basically just letting the IRS use your money, right? You loaned them your money. Yeah, here you go, IRS. You use my money for the next 6 months or however long. And then you get your refund. I love refunds. I do. I really though like almost close to zero. I like getting a little bit back. I don't want to owe a little bit back, but not having to pay, basically not having to pay come the new year. But I also don't want the IRS to use they can't have my money. I need my money. Cash flow, reserve funds, vacation, paying yourself for the love of God, everybody, please. So taking that into consideration, right? Here is something that you do, that you take a look and say, hey, are there things that we could be doing? Where are we? Remember, you have dependents perhaps, and there are tax credits, and there are all sorts of things that will come into play. But we just want to make sure that we are in line with what our taxes are going to be next year, and especially when it comes to estimated taxes, because we don't want the IRS sneaking in a penalty here or there. All right, so just saying that. So you take your family's income, take the business income, we put it all together. There are a lot of calculators online that you can use. Get It Back, H&R and H&R Block and TurboTax. You don't have to buy their software to use their estimated tax calculators. Use it, throw it all in there. I'll also tell you that TurboTax has a very accurate way of handling time space. So a lot of times when I speak to childcare providers, family childcare in particular, I talk to them about TurboTax if they're going to, Jen, taking control, we're going to do them ourselves. TurboTax is a great way to do it because TurboTax addresses time space very well. But that doesn't mean that you have to. Just because you're using these doesn't mean you have to file your own taxes, right? It just means now you can have a more accurate picture, all right? So when we looked, if you took all those numbers and you took what Tanya had and took what her spouse had and you looked at it, she actually, based on the combined spouses withholding, technically they're ahead of the game. They may not even have to be paying any more taxes. I'm not saying don't pay any more taxes, but I'm saying let's get realistic and not be loaning the IRS money. We want to keep that money in our pocket, right? So if somebody so in our little examples, we're thinking Tanya's ahead of the game, and way to go, Tanya. That's fantastic. But if Tanya's not ahead of the game because she's going to have higher revenue, higher profit, I should say, excuse me. What are we going to do, right? Because we've got time. I love it. End of September, beginning of October, I've got time to figure out what my taxes are going to look like, right? Good idea, at least. What could we do? Remember, I will save retirement plan. Ah, look at that. It's the number one thing on there. Amazing, right? You read my mind. Retirement plans. Please think about that there. Um, Home business deductions, right? If you're family childcare, there are deductions that you can take for whether it's improvements, and also I can talk to you about depreciation. Everyone talk about depreciation? Love to talk about depreciation. One more tax thing before I go on to the list. I'd like everybody to write down, if you're a family childcare business, if you are not aware, if you have you or have you not depreciated your home? Please speak to a tax preparer and see if you have depreciated your home. Maybe you did it years ago and you're past the timeline of home depreciation. If you haven't, I would like you to just write down the word recapture and speak to a tax professional if you would like about recapture. What is recapture? When you sell your home, if you have run a business in your home and you sell your house, the IRS, there's taxes you're going to pay. Recapture. It's recapture of depreciation, whether you taxes on depreciation, whether you claim that depreciation or not. Oh my God, we're gonna be taxed when we sell the house. We didn't even depreciate it. What do you mean? I didn't get the benefit of that depreciation every year. IRS doesn't care. Stinkers that they are. So please, if you haven't depreciated your home, I would love it if you could speak to a tax professional, pull out previous year taxes. You may have a very good idea. I hope it's been done. I hope you continue to do it through the entire amount of time that the IRS allows you to with a family home. But if you haven't, I would really like for you to speak to a tax preparer, because the last thing we need is that whammy when we sell, right? Keeping that in mind. All right. Well, there are more deductions that you can take. You paying down debt. Sure, if we know we're going to have more profit and we have business debt and we're doing it in 2026 this year, all right. You know what? There's some debt, might not lower your tax liability necessarily, but it sure will make next year nice, right? So not everything here lowers the tax liability. Expenses do. Tax the contributions for your retirement plan. There are things, right? Expansion, reserve fund is the same as paying down debt. We're not talking there about mitigating taxes as much as we are protecting ourselves for the future. Huge believer in reserve funds. Just chip away, little bit at a time, a little bit at a time. Cut a little bit back here or there. You are the busiest people that I will ever meet in my life. You don't have a heck of a lot of time to be looking at all of this, but I do ask that you make the time because you're worth it, and the tax, nothing worse than tax time, right? And the unknown and problems and things like that. So there's a thing here that says defer income. Please speak to a tax professional. What that is referring to is sometimes there's a tax strategy where maybe in December you could be billing families in January. I'm not recommending that, but that is a tax strategy should you have more profit than you normally would have. You may want to defer your payments for December into the following tax year. Again, please speak to a tax professional about it. I don't see it happen very often. I do know that it is a strategy. I'm not a tax preparer in all transparency. I'm a tax educator, right? I don't prepare taxes. I prepare my own taxes, TurboTax. And I don't own a business. Also transparency. This is what I do. I do this at Civitas. So there are things that, in terms of the home business deduction, business use of home, please don't forget all of those, because those expenses, right, are a portion of our property tax, of our mortgage interest, not our mortgage payment. However, if it's rent, it's our rent, our homeowner's insurance, all of our utilities, time space percentage, home business deduction, making sure we take advantage of that. You'll see here on the bottom, I have a little asterisk that says center home office expenses have restrictions. So many years ago, way back before 2017, home offices, every person who owned a business had the advantage of a very nice potential tax deduction for home businesses. That's no longer the case, just so you know. The rules around home office expenses for business owners other than family childcare are very, very tight. All right. And there are a couple really strict rules. One is the IRS says that if you can do those activities anywhere else, if you have room in your center, you can't claim a home office expense. Has to be used regularly. Also, can't do anything personal in that space to claim it. Families sharing that printer, as far as the IRS is concerned, you're not taking that home office deduction. So if you are and have been taking a home office deduction, please speak to your tax preparer just to make sure that you're meeting the rules. If you're doing what's called the standard method, it's $5 a square foot up to $1,500. You could do actual, but the rules around it are very, very strict, and they did not change with the One Big Beautiful Bill that was signed. I think there was some anticipation that that might be changed in the favor of business owners. It wasn't. So family homes and home shared expenses, yeah, just be careful with home office. Again, please speak to a tax professional, but just letting you know it's not what it used to be, because back several years ago, that's what you did. You owned a business, you also had a home office expense, and that's not the way it is anymore. So a couple things here on that list that don't lower your tax liability, but make life very nice. The reserve fund, paying down debt, we love it, but other things like the retirement, that we can lower our tax liability. All right, thinking about that. There. Now, here's a situation that none of us love, but if we came into next year, we're going into next year and our revenue, maybe we don't have a lot of taxes, but what if we don't have as much revenue as we thought we were going to have? This time of the year can be a real eye-opener, right? There's no hiding. When we pull all that stuff together, it is a realistic picture. Boom, this is where we are. So what can we do? We may have no tax liability and say, oh, that's fantastic. Oh, wait a second. I also made nothing. I made very little. And I've worked my butt off. Hardest working people, busiest people we will ever meet. All that, where's my money? Well, let's think about what we can do to perhaps keep some more money in the business, in terms of, do we need to, this might not be a cure-all for 2026, but when was the last time we looked at our pricing? Are we covering our cost of care? Remember, just your competition should not be what drives your pricing, right? Your cost of care and all the wonderful things that make your program what it is. That is how pricing gets determined. We have to cover our cost of care. We have to pay ourselves. That should be in cost. I say we, I apologize. I don't mean to be, I am not of your level, but I say we, but you, right? You. I'm not a child care provider. I just work with taxes and I do coaching. So everything that you do, thinking about that last quarter, are there things? Are we collecting the right amount of tuition? Are we looking at our expenses? Sometimes those expenses sneak up on you. I apologize if any of you have ever heard me say this before, if you've been in coaching with me, but I had a situation for a long time. Apparently, my husband and I have separate finances and we put stuff together in one account. And he had a Netflix account and I had a Netflix account for years. I don't know, at that time it was probably $15, about 30 that it is now. Oops, only needed one Netflix account. Long time, we didn't realize that. Thinking of things like that, little things that can help reducing your expenses so that you're making more money, keeping more money in the business. So billing and collections, I was just working with a provider who's kind of on the borderline of crisis. She and I were talking, and she said, well, ever since my the woman who's handling my bookkeeping left, and she said, I never even get a chance to really delve into QuickBooks. She said, and actually, I don't even look at the parent portal on my CCMS. We started talking, and it turns out parents owed her tuition. She hadn't been collecting her fees. She was able to bring in a nice amount of money. Parents expected to pay it. Why nobody brought it to her attention? That's okay. I'm not judging, but she was able to collect, right? So thinking about all of the different things that you can do. Financing options, I'm not encouraging anybody to take on any more debt. Please speak to a financial professional about if you need to do anything like that. Professional guidance, really, when it comes to investing and even retirement, speaking to professionals, absolutely fantastic. Make sure they tell you up front what they charge, right? We don't want to be surprised. No, and you're in the driver's seat whenever you're talking to a financial professional. Don't sign anything. Don't give them any. Ask them for everything in writing. Go home and take a look at it. All right, here's our conclusion. I bothered you guys enough. What do we want to do? Well, we want to use these last few months for analyzation. We want to take a look. We want to have all of our revenue. We want to have all of our expenses. We want to look in our IRS portal. And I promise, in just a second, I'll put all those links in the chat. Usually I have somebody with me. I don't have anybody with me today, except Emily. That's not Emily's job, our beautiful interpreter. There. Okay, so we're going to do that. We're going to take a look and estimate what our estimated taxes would look like throughout the entire year. Remember that our slide showed one step. I used to get it 2 steps. So basically, you're going to take a look at that. And then what do we need to change? Do we need to make changes? Are there things we don't want to overpay? We don't want to underpay. We don't want to pay, I definitely don't want to pay penalties, but I sure as heck don't want the IRS to be using all of my money. I want to be safe. I want to be so safe that I could be using that for my cash flow and my reserves and paying myself. So thinking about that, and then if you are in a position where professional help would make sense, please get it. But also, again, Carlos and I are not tax professionals, we're tax educators, but we are one rule of Civitas coaching, if you don't already know this, is we never guess, we never make it up, we find out the answer. So it is not uncommon for Carlos or I to be like, I have to get back to you. Might not know it, might not, and things come up all the time. So if you have any interest in one-on-one tax coaching, retirement coaching, by all means, please, and I'll show you the list in just a second. In fact, we'll jump through here. Do we have, actually, I'll pull this up just so that you can see it. Keep in mind, as far as those group sessions, that's what's over on the left-hand side of this. Excuse me, what did they do? Oh, I apologize. So for decal, everything you see here is a group we can also do in one-on-one coaching. So if you happen to see anything there and you'd like one-on-one coaching, I've got a couple months to do it. If you want group coaching, we'll have to get you registered by this Friday because we have to end group coaching a little earlier. So putting those topics up there. Curious if anybody has any questions, you can just come off mute. Tell me anything that you want. If anybody, again, would love to see anyone in coaching, if you are interested, a lot of great things here. If you've never taken our group coaching, we try to get as many providers in a group as we can so that you guys can share experiences. It's peer learning a lot. We also selfishly at Civitas, I learn a lot from all of you. I'm constantly taking notes, so people are giving me hints and all sorts of things, tips and tricks, not tricks, tips, so that I can help providers nationwide. So we learn from you all the time there. But I am going to throw links in the chat. I don't see anybody coming off of mute, but I'm going to go to the chat.
I have a question.
Sure.
Hi. Really good information. I wanted to know, my daycare is currently closed. It's been closed since April because I had a leak and we had to close the daycare due to the house getting renovated due to the
Okay.
leak. I'm curious, how do you think how do you think it might differ next year with my taxes, considering that I've been closed for so long?
Yeah.
Do I need to include any of those expenses that
Well,
I'm
yeah,
incurring, or
you won't have to rate the repairs, the renovations, all of that. You won't have to include that. But how many years have you been in business?
this is my third year.
Okay, so we have some history, right? We have some history. Now that we're doing
Yeah.
improvements and fixing all of those problems, are there also going to be extra offerings at the program? Are you going to be expanding hours or offering any services that you didn't? Because we need to take that increase in revenue into consideration. So it's really taking a look at
Um,
previous
yeah.
years. And for this
Oh
tax
yeah.
year,
I already do like.
we do a lot. I think that might be cutting in and out, so I apologize. Well, right now you're on mute, but um, just so you know, you probably have either no or very little tax liability for next year. I see you're breaking up on not a problem at all. We can converse via chat. It's just fine. Um, so your tax liability for 2026 because you were closed and you have a lot of expenses, it's probably, you may have, may not owe a single dollar. I don't know your particular circumstances, what it looked like from January through April. Um, some of what you are doing, if they are repairs, you don't have to, this is me, again, Gen taxes all over. If they're repairs, just keep in mind you don't depreciate repairs, but you do depreciate improvements or use a escalated method of depreciation. If you ever want to meet with us, we can talk to you about it, or you can speak to a tax preparer. But what I really think I would do is think about what your offerings are going to be as soon as your doors are open and enrollment. And is it going to take a while for enrollment to come back? Because those children and families are currently utilizing a different childcare. Keep that in mind, right? Because often if we've had a closure and we come back, we're not rocking and rolling necessarily from day one. So thinking about, unless obviously you have great care, the families are probably just can't wait until you reopen, but just in case if that changes. Be a great time also to think about your marketing for next year so that you can hit the ground running, right? If you're still not don't have children in the program, boy, great time to think about a marketing strategy. We can do one-on-one coaching with you on marketing. Ava does that for us. So I hope that I know it's very hard for us to get an exact idea, right? But remember the expenses that you have now for renovation and repair, you're not going to take those into consideration when you're thinking about your taxes for 2027, unless it's continuing into 2027. So just keeping that in mind there. I don't know if that was helpful there. Any other questions? Oh, okay. And please feel free again if you want to, if you just want to talk to me a little bit more about it, you feel free to just put your email in the chat and they'll sign us up. Again, remember, all free. Coaching for out of state. We all unfortunately know unless we have a contract with an organization in that state. Hi, what state are you in? Where are you? If you put in there. I'm going to start to throw chat links in the chat, so I'm not ignoring anybody, but just so you know, we're going to have, and again, PDS number, please name a PDS number. I am putting everything in English and in Spanish. So, and look at me. Oh, one-on-one, absolutely, hon. Can you just throw your email in there and you and I can meet? And I'll probably meet with you only because I know your circumstances. Carlos can meet with you as well. That would not be a problem at all. But by all means, we would love to meet. Thank you. Thank you very much. I get this chat. So, all right. This is that time space calculator. Oh, this is what I'm going to tell everybody. Time space calculator that I'm putting in the chat. What am I doing? Control C. I'm a very old person and cannot remember anything. You have a center in Georgia and Florida. Right now, not working in Florida. Would love to be working with organizations in Florida. We like working with organizations everywhere. So you never know. The time space calculator, fantastic. Just so you know, the link is not to a web page, but instead it downloads the little spreadsheet for you, just so that you know. This next link here, English and Spanish, is the app that I referred to earlier. We talked about way back when we first started to say hi to each other. Oh, we're over. Just so everybody knows, if you don't need the links, you certainly get credit if you need to step away. So if you're done for the day, I absolutely understand. I am not offended. Emily is not surprised that I am running over. She and I have been working together for many years. Emily's not surprised. And Emily, let me know if we have any questions on if we have anyone in the Spanish channel. All right, the next, we're going to see something that says preparing for tax year. It says 2025. A lot of tax law is going to remain the same for, this is also English and Spanish. This is the guide that Civitas creates mainly for family childcare, but honestly, there's great information in there for everyone. Now, estimated taxes, this here, this is where you will find out information at the IRS website. If you happen to Google it and it tells you that the page is down, it's not down. This will work, this link will work, but today I had my big surprise when I was like, oh goodness, how could the IRS, how could estimated taxes be down? There we go. Oops, Emily, I'm gonna come back to you in just a second. All right. Oops, what am I doing here? Oh, okay. So just Thriving, right? The Decal Thriving Childcare website. It will be the same website when we start again in November, but there's so many resources there if anybody needs them. Now I'm gonna get my act back together. Oh no, thank you, Emily. So we don't have anybody on the Spanish side there. Any other questions? Anything I could help anybody with? If you have your name and email in the chat, we will get you set up for one-on-one. So we'll end up, Zenny, you and I will end up doing we'll talk about your situation, and you can bring some numbers to the conversation if you want. Once we have you, be more than happy to take a look. But otherwise, folks, we are done. Last webinar of this portion of the contract. Looking forward to working with everybody at Decal next year. I should actually. This is why they don't leave me alone. In that list, there. Remember, only have till Friday to register, but there are a couple of new topics for this year that we've been in. Tax credits, maximizing tax credits, and revenue stacking, which is about combining as many streams of revenue as you possibly can. If you are meeting with a tax professional, keep something in mind that tax credits are much more valuable than expenses or tax deductions. Ever see the word tax credit? Ask if you are eligible for tax credits, please. This here is the for the website. I put that link in there. And this, don't worry about this. You can put you don't have to use this. You can just put your name and your email address in the chat for me if you'd like to do that. And this is very important. If you don't mind, we need the feedback. So as the director of professional learning and standards at Civitas, I oversee all of our coaching and all of our webinars and the content. I work with people on the content, and it's a nice sized team. Feel free to say whatever you would like. And otherwise, then, folks, we are done. We're wrapping up this year, this tax season. A link for the survey. Oh, you know what? Shame on me. You're right. QR code. Bad Jen. It's a Monday form. All right. Thanks, everybody. It's a pleasure as always. Take care.